Hey everyone, welcome back to Corporate Decoder, the place where we sift through corporate filings so you don't have to. Today, we're cracking open Krispy Kreme's latest 10K, their annual report. Get ready for a sugar rush of information because, trust me, some parts of this report are definitely less glazed than others. We're about to look at the sweet and the not so sweet. Seems like Krispy Kreme is trying to expand its reach while dealing with some serious growing pains and even a cyber attack. Let's dive into how this beloved donut chain is handling it all. First things first, the numbers. For the year ending in December, Krispy Kreme brought in about $1.66 billion. But here's where it gets interesting. Their adjusted EBITDA, which is a measure of their profitability, was down almost 9% compared to the previous year. This means that even though they're selling a lot of donuts, it's costing them more to do it. One of Krispy Kreme's big strategies is to get their donuts into as many places as possible. They call these global points of access. Think of it like this, it's not just about having their own stores, it's also about getting those donuts into grocery stores, gas stations, and even fast food chains. Speaking of fast food, Krispy Kreme has made a big move. They have a deal to sell their donuts at McDonald's. This is a game changer that will help distribute donuts across America. The plan is for this to roll out nationally. But it hasn't been all smooth sailing. The company had a cybersecurity incident that caused certain operational disruptions and is estimating it lost $11 million in revenue because of this. Plus, fixing the attack cost them about $3 million for fiscal 2024. This is a reminder that even donut empires aren't safe from cyber threats. Now let's talk about cookies. Krispy Kreme used to own Insomnia Cookies, but they sold off most of their stake, pocketing about $127 million. But this is not a breakup, they still kept 34% of Insomnia Cookies. Krispy Kreme is broken up in three main segments. The US, where they focus on company-owned stores. International, which includes all Krispy Kreme company-owned operations. And market development, which is the area where all the franchise operations across the globe happen. A huge part of Krispy Kreme's plan is something they call their omnichannel strategy. It basically means they're trying to sell donuts in every way possible, such as local shops, grocery stores, deliveries. But this can be hard to navigate given shifting consumer trends such as fewer physical stores and more digital delivery orders. Here's another challenge. Krispy Kreme is responsible for providing key ingredients to their shops worldwide. If something happens to their manufacturing facility in Winston-Salem or shipping, it could seriously mess up their whole operation, particularly to the US and international locations. And of course, Krispy Kreme has to protect their secret donut recipes and their brand. If someone starts making fake original glazed donuts, or our trademarks aren't properly protected, that could hurt their business. Lastly, I know this is something that is overdone, but Krispy Kreme is still mentioning as a risk health epidemics and weather conditions are bad for business. These might influence consumers' behavior or interrupt the delivery chain of important product. Alright, let's dive into the tax side. Krispy Kreme's tax rate can be a bit of a roller coaster. It depends on where they're making money, tax laws and changes made by tax authorities that may exert a significant influence on their overall effective income tax rate. The government can giveth and the government can taketh after all. Now, a look into Krispy Kreme's investors. JAB, which owns a big chunk of the company, has some special rights, such as access to management and financial information. Although they must follow securities law, JAB definitely knows a lot more about what is happening day to day in Krispy Kreme than smaller shareholders do. Now, let's talk about a serious issue that has been identified. Krispy Kreme is reporting a material weakness in its financial reporting. Basically, they're saying their internal controls aren't strong enough to prevent errors or fraud in their financial statements, which means some people can create financial wrongdoings without oversight. On the topic of cybersecurity, Krispy Kreme has appointed a chief information security officer to look after all the data and tech in the company. The cybersecurity leader will be looking into possible security mishaps, while a committee of the board oversees the annual enterprise risk assessment. That way the board can make the best decisions for the direction of the company. In conclusion, Krispy Kreme is in a period of transition. They're trying to grow by opening new locations and expanding their partnership with McDonald's. However, they're also facing real issues like increasing costs, cybersecurity threats, and financial control problems. I would say there are some serious problems behind the brand, but overall, Krispy Kreme looks on track with its long-term strategy. Now it's your turn. What do you think of Krispy Kreme's plan? Are you buying or selling? Let me know in the comments. If you want to keep up with the corporate decoder, make sure to subscribe, like, and leave a comment so we can continue making the information you need.